Hey everyone, what a great Fed meeting. Jerome Powell really nailed this one. I mean, the last time when he spoke, the market tanked and it continued tanking for months and months after that. But this time, I think he really nailed it. It was one of the most balanced, I would say, Fed meeting or Fed or Jerome Powell speaking to the press that I have seen. He actually maintained right in the middle of the lane. He wasn't too hawkish, he wasn't too dovish, and he straight away put the 75 basis point increase out of the window right away to begin with. But he also said something which was very, very exciting. So let me give you a quick brief of what Jerome Powell said. Okay, first of all, as expected, the Fed raised interest rate by 50 basis point, the biggest single meeting increase since 2000, which was of course a huge number. The 75 basis point move is not something the committee is actively considering, so that's out of the window. But there was a big interpretation here, and I will explain that. They also announced that they would start running off their balance sheet at the beginning of June as expected. So of course, there is nothing new that's going on here. Now, what happened with this is that as soon as Fed initially came out and gave the report about the 50 basis point increase and nobody knew what was going on with the 75 basis point increase, the stock started to come down. And as soon as Jerome Powell said that, you know what, no, 75 basis point is something not even considering right now, the stock just rallied. But he said something which was very interesting. He said that we are keeping an eye on inflation. We are keeping an eye on the financial market, and then we will decide. So if you look at the inflation, he thinks that inflation has peaked and now it's not going to come down like this, but it's going to stay in a straight line for a while before it comes down. And of course, 1 month is not enough, 2 months is not enough. They want more data. So in my opinion, inflation is cooling down on the things like used car we have seen, or gas prices have come down from before. But inflation is running pretty hot even now on certain categories. For example, food, for example, energy prices in terms of, I'm not talking about gasoline per se, but in the home heating energy prices and stuff like that. So I think that we are going to see inflation be in that straight line. It may not peak. It may have peaked in March. We will see. When we get the CPI data, we'll get a better idea. But I think we are going to continue to see inflation run hot for a while. And one thing that I also noticed that I covered in my previous chart, that if you look at the credit card statements, people are still spending money. And that's what he said, that the economy is pretty strong. In my opinion, economy is strong right now, because right now we are in this reopening, we are in this phase where people are going out, they're spending money, they're traveling. Look at the airline stocks, they all are doing good. Look at the travel and tourism, they all are running pretty hot because people are spending money, they want to get out and they want to do things. But the debit pin or the debit card withdrawal is coming down. It's actually negative. So people don't really have that much cash money, even though they're spending money, but they don't have cash money. And in my opinion, it's going to peak in Q2 and Q3 of 2022. That's where, when we have this whole summer spending or people going out spending on vacation and stuff, will settle down and people will have to pay back their balances on their credit card. And that's where it's going to come and bite us. So the rally that we see today, it might last few more days, in my opinion, because the way it came because of the 75 basis points is out of the question, and they did exactly what market wanted to hear. So there is no more surprises now. And May is technically a month when things rally, because these S&P 500 companies, they have a deadline for May to buy back their stocks or purchase the stocks. So there's always a May considered as a month when it rallies, or it usually rallies. So I could see that, stock market do well in the month of May. But keep an eye on Q2 and Q3 of 2022. And that is why anytime we see a rally in these times, that's a time to take advantage of basically taking some profits off the table. For example, I have some United, some Delta shares. I'm going to sell them next week. If the market continues to rally, I'm getting out of these travel because I feel that they have peaked at this point. Yeah, it can go down another 2-3%, but that's not going to change anything. I want to take profits off the table. So don't forget to book your profits, because I feel we are going to see a rally tomorrow. I feel we are going to see a rally on Friday, but Friday can also be some profit taking that can happen in the market. And same thing is going to happen with high value stock. Like for example, SoFi all of a sudden was like up 8, 9, 10% today. And that's what changed really. If you really look at it, what changed from last week to this week? Nothing. Is the market sentiment. And market sentiment can change like this next week as well when we get a news of Russia-Ukraine. While Russia is saying we won the war, and Ukraine coming back and attacking saying no, you didn't. So these kind of sentiments can change very quickly, and market can change the direction very quickly. So here's what I'm planning on doing. these kind of days or these kind of green days, and if we see next 2-3 weeks of green, awesome, please give it to us, because we want these green weeks. We are seeing 4 months of pain. I mean, after November of last year, my goodness, I mean, like now we are going into like 7 months of pain. So we can absolutely can take these rallies, because it doesn't matter if we get a 2-week rally or a 3-week rally, we'll still be far below where we were back in November, October of last year. So don't forget to take advantage of it. And I think under the hood or under the covers, there's a lot of spending that's going on, but people don't have cash to cover that spending, and it's going to come out. It's going to come out sooner or later. So I think what we saw from the Fed was very bullish, was very good. And I feel that Fed is in the right track. It's not going to do a rug pull. It's not going to shock the market, because they can't afford to shock the market where it is right now. So hopefully things change, and hopefully we get this rally for next 3-4 weeks and we all can take advantage of it. I hope you liked today's video. Consider subscribing and give this video a like button. Until next time, you all have a sparkling day.